Hello. So everyone, is it visible and audible? So just yes, students, tell me, is it visible? Everything okay? Fine. So live chat has been enabled. So there is some latency. Yes, I can observe it. Fine. So on the screen you can see the starting chapter is dividends. So today three topics I'm going to cover as it is a first day. And in front of you there is yes, a document PDF is also visible. So total some 16 or 17 questions are there. Each and every question first I'll read it and then I'll go through my master notes. So in the master notes I'll explain the provision. It's not a detailed explanation, it's a marathon, and then I'll come back and I'll show you the answers. Okay, so chalo, let's start the marathon, exceptional topics marathon. Okay, fine, everything is perfect. Hello students, today I'm going to cover three chapters: dividends, charges, deposits, which is having a weightage of 15 marks in your examination. Approximately 15 marks. You can see from deposits, each attempt minimum 5 marks is coming from the deposits. Dividends, last two attempts no question came from the dividends, and so this time, Jan 26 I'm expecting a question from dividends. Next one, charges also. So in May 25 attempt 15 marks came. So from these three chapters I compiled exceptional topics in one PDF. So this time, I'm not even explaining the point, this is an exceptional point. Now, I just created a story simply how examiner is going to ask you. I'm going to read that story and then I'm going to connect that story with the provision that is in my material. You can see, you can download this material from the website Stress of CA and CMA, and under free resources tab you can download this document. Chalo. So starting with the dividends. So first topic, dividends, and I'm going to show you the question 1. You can see question 1. Moonstar Electronics Limited, a public company, has a paid up share capital of 30 crores. The board of directors convened a meeting on 15th January 2025 to review quarterly financial results for financial year 24-25. The results showed profit of 2.1 crore in quarter 1, 1.8 crore in quarter 2, but a loss of 4 crores in quarter 3 ending 31st March 2024. Company also had a surplus of 2.5 crore in its profit and loss account as on 31st March 2024. So this is opening balance in profit and loss account. And you can see Q1 profit of 2.1 crore, Q2 profit of 1.8 crore, and Q3 there is a loss of 4 crores. So the net result as on 31st December 2024, the net result is 0.1 lakh, 0.1 crore negative. Okay, so the average dividend rate declared in the last 3 financial years was 7%. Based on earlier quarter profits and accumulated surplus, the board declared interim dividend at the rate of 10% on 15 January 2025. The finance manager deposited the dividend amount in a separate scheduled bank account on 22nd January 2025. See, declaration happened on 15 January, but deposit happened on 22nd January. So how many days gap is there? We will see. During the AGM held on 30th September 2025, shareholders attempted to increase the rate of final dividend beyond the rate recommended by the board. So shareholders' expectation rate is greater than board recommendation rate, stating the recovery in the last quarter justified a higher payout. The statutory auditor raised objections regarding validity of the interim dividend rate. whether interim dividend rate is valid or not, delay in depositing the amount, and shareholders power to increase the dividend. Questions: is the interim dividend at the rate of 10% valid? Was the dividend deposited into a separate bank account is in compliance with law? Can the shareholders increase the dividend rate at the AGM? So these three questions we are going to answer. But before that, just open the material. See, we are having two types of dividends: interim dividend, final dividend. What is the difference between interim dividend and final dividend? Interim dividend is recommended by board of directors and announced by board of directors. Declaration and recommendation, everything is taken care by board of directors, whereas final dividend recommended by the board, approved by the shareholders at the AGM. So time of declaration, you can see before preparation of financial statements, whereas final dividend after preparation of financial statements. Next one, interim dividend can be revoked with the consent of shareholders, but final dividend once declared, it's a debt, can't be revoked. Next one, yes, provision in AOA, articles permission is required for interim dividends, whereas for final dividends, specific permissions not required. Now let's see interim dividend. Yes, just now I told you it is a dividend declared between two AGMs. Next one, coming to the sources for interim dividend. Surplus in the profit and loss account. This is nothing but opening balance. Profits of the current financial year, for which year you want to declare dividend, that current financial year profits you can use it, or profits generated up to the quarter preceding the declaration date. In our question we can see 15th January 2025 they declared a dividend. So up to the preceding quarter means 31st December 2024. Ratification. Interim dividend must be ratified by the members at the upcoming annual general meeting. And in case of losses, if there are losses in the current financial year, interim dividend cannot exceed average rate declared in the previous 3 financial years. So this is condition 1 in case if you want to declare dividends where the current financial year you are having losses. So what is the maximum rate of dividend you can declare? Last 3 years average rate of dividend. And the dividend must be deposited in a separate account within how many days? 5 days of declaration. And all the provisions that are applicable to final dividend shall apply to interim dividend. That means amount should be paid within 30 days. If not, transfer to unpaid dividend account within 7 days. If not claimed for the next 7 years, transfer to IEPF. See, if you remember the definition of dividends, dividend includes interim dividend. That means all the provisions that are applicable to final dividends equally applicable to interim dividend. 1 or 2 exceptions are there, like recommendation and declaration of interim dividend is taken care by board of directors. So based on that, you can see, is the interim dividend 10% valid? No, because in the question it was very clear. Last 3 financial years rate of dividend is 7%. So 10 is greater than 7, not allowed. Dividend should be deposited within 5 days of declaration. But here they took more than 5 days, 7 days they took. So it was deposited late. And can the shareholders increase the dividend rate at the AGM? No. Simple logic. Who is doing the business? Directors. They know how much money to be retained, how much money can be distributed. So you can't question them, you can't ask them to increase the rate of dividends. Clear? So next, question number 2. Falcon Engineering Limited, a public company, has a paid up share capital of 50 crores for financial year 24-25. What is the paid up share capital? 50 crores. Company reports a profit of 8 crores before depreciation. Depreciation as per schedule 2 is 2 crores. The profit and loss account shows a surplus of 5 crores and free reserves of 10 crores as per the audited financial statements. So this is, profit and loss account balance of 5 crores and this is free reserves, general reserves 10 crores. It also holds a revaluation reserve of 3 crores and securities premium of 4 crores. You tell me, for declaration and payment of dividends. So what are the sources? How many sources are available to us? 4 sources. Current year profits after providing for depreciation. Let me show you in the material. Current year profits after providing for depreciation. And second source is accumulated profits which remain undistributed. Accumulated profits which remain undistributed after providing for depreciation. And third source is combination of A and B. That means current year profits, previous year profits which remain undistributed. And last one is money provided by CG or SG in pursuance of guarantee given by the government. So according to this, you tell me, revaluation reserves allowed, not allowed. Securities premium allowed, not allowed. So this 5 crores, this 10 crores and current year profit is allowed. Next one. Due to liquidity constraints, the board proposes to declare a dividend of 9 crores without providing for depreciation. You tell me. Possible or not possible? Not possible. Without providing for depreciation, 100% not possible. And compensate the shortfall using its revaluation reserve. The board argues that reserves are adequate and depreciation is not mandatory. Section 123 is very clear. Whatever profits available after providing for depreciation, from that profits only declaration and payment of dividend is allowed. So board argument is tenable or not tenable? Or not tenable. Further, due to anticipated inadequate profits in financial year 25-26, board intends to declare dividend partly from accumulated free reserves in accordance with rule 3. So in case of inadequate profits, so what are the conditions for declaration and payment of dividend? I'll explain you, just wait. In a separate meeting, CFO deposited dividend amount on the 8th day after declaration in a separate bank account. See, transfer of money to separate bank account should be done within 5 days. 8th day, it's a punishable offense. During the AGM, a dispute arose when a registered shareholder and an unregistered transferee both claimed entitlement to the dividends. Record date was set as 10th September 2025. So there is a dispute between two fellows. One is registered shareholder and the other one is unregistered transferee. Now who is entitled to receive dividends is the point. General rule, dividends will be paid only to the registered shareholder or to his banker or to his order. Okay. Can the company declare dividend without providing for depreciation? No, already covered. Can revaluation reserve be used to pay dividends? No. Has the company complied with section 123 subsection 4 regarding deposit? Deposit should be done within how many days? 5 days. But it deposited on 8th day. This is also a mistake. Next one. Who is entitled to dividend on the record date? Registered shareholder. So yes, points covering this question you can see here. So for us, total 4 sources are there. Current year profits after providing depreciation, undistributed profits after providing for distribution, after providing for depreciation, both, and money is provided by the CG or SG. Next one, current year losses or previous year losses and depreciation must be set off. Capital profits are useless. Capital profits are not considered as distributable profits. And next important point, discretion on transfer to reserves. Sir, before paying dividends, before declaring dividends, is there any condition on us to transfer certain portion of profits to free reserves or general reserves? No. Under old Companies Act, there is a condition. But under new Companies Act, it is up to the discretionary powers of the directors. Company may transfer any portion of profits to the reserves, but this is not compulsory. Free reserves, we had a definition. Free reserves excludes revaluation reserves and fair value adjustments. We had a separate accounting standard in accounts where you create some FCTR. So all these current assets you value at closing prices. Foreign assets, current assets you will value at closing prices. Now any changes in the carrying amounts, so you will transfer that amount to the reserve, and that reserve is not useful for payment on declaration and payment of dividends. Next one. In case of inadequacy or absence of the profits, 4 conditions. Remember, 4 conditions, simple conditions. Let me explain you with a small example, just a small example. So company paid up share capital. Company paid up share capital 100 crores. Company free reserves 30 crores. And current year losses 4 crores. Next, latest 5 years dividend rates. Latest 5 years 1, 2, 3, 4, 5. Latest 5 years 8%, 9%, 10, 11, 12. These are the rate of dividends company declared over the past 5 years. Now you tell me the current financial year, to what extent company can pay dividends out of the reserves. For this 4 conditions you have to remember. Condition number 1, average rate of dividends. Average rate. Latest 3 years you have to consider. Latest 3 years means it's not 1, 2, 3. It's 3, 4, 5. So 10 plus 11 plus 12 divided by 3, that is 11%. Next, condition number 2, 1/10 of the paid up share capital plus free reserves. So that is 1/10 of 100 plus 30, 130. So 13 crores you can withdraw. Balance after withdrawal shall not fall below 15% of the paid up share capital. So free reserves balance should be 15% of paid up share capital post withdrawal. So that's why I'll write like this: free reserves is equal to 15% of 100 crores. And what is my existing balance? Free reserves existing balance 30. So I'll deduct 30. I'll deduct that amount from 30. So 30 minus 15% of 100 crores. So 30 minus 15 crores, that would be 15 crores. So this 15 crores or 13 crores, whichever is lower, means 13 crores. Clear? Now once amount is ready, from that deduct current year loss. Many students are forgetting to deduct current year losses. Deduct 4 crores current year loss. So 13 minus 4, it would be 9 crores. Now for us, source for payment of dividend is 9 crores, whereas average rate of dividend is 11%. So 11% means 100 crores into 11%, that is 11 crores, but source is not permitting you to pay dividend of 11%. Source permits you to pay only 9 crores. So 9 crores divided by 100 means 9%. That means last source or average rate of dividend, whichever is lower, you have to consider. A small problem I explained you. See, 100 crores is the paid up share capital, 30 crores is the free reserves. Current year loss 4 crores. Current year loss 4 crores. Understood? So take latest 3 years average rate of dividend. This is limitation on the rate of dividend. Coming to the source, 1/10 of the paid up share capital plus free reserves, that is 13. Balance after withdrawal shall not fall below 15% of the paid up share capital. So my current free reserves is 30. 30 minus 15% of 100 crores, that means 15 only. 30 minus 15 means 15 crores. So 15 or 13, whichever is lower, 13. From that deduct current year loss of 4 crores. Now you will get 9 crores as a source. Source or rate of dividend, whichever is less, consider it. So 9% is the rate of dividend permitted under Companies Act 2013. Clear? So I think 4 conditions I satisfied. Next one. This is not applicable to government companies. This is not applicable to, this kind of calculation is not applicable to government company. On that, one exceptional question I drafted. Just observe. Haryana State Energy Corporation Limited. What is the company? Haryana State Energy Corporation Limited, a government company, has 100% of its paid up share capital of 500 crores held jointly by CG 60%, ESG 40%. So 100% owned by the government. Look at my material. These conditions do not apply to government company. No. Continuation also you read. Where the entire paid up share capital is held by CG or SG. Even 1% is held by public, then these above conditions will apply. Above conditions will apply. Getting my point? Entire 100% capital should be held by governments only. Now let me read the question. For financial year 24-25, company incurred inadequate profits of 12 crores. Profit is there, but it is inadequate for current year dividends. Its audited financial statement shows accumulated free reserves of 180 crores and a revaluation reserve of 20 crores. Ignore revaluation reserve. Dividend rates declared in the 3 preceding years were 3, 5, 6. So average of these 3 rates is 8 plus 6, 14. 14 by 3, that would be 4.66. But if you remember, this calculation is waste. Calculation not applicable. Average rate of dividend, condition 2, condition 3, condition 4 not applicable, since it is a 100% government owned company. So generally students will do calculations. I also did it, but not required. The board proposes to declare a dividend of 8% for financial year 24-25, partly from current year profits and partly out of accumulated free reserves. A shareholder director questions whether company is bound by Rule 3 conditions relating to maximum average dividend rate, 10% withdrawal, 15% minimum balance, adjustment of current year loss. Is company required to comply with Rule 3 conditions? No, it is 100% government owned company. Can it declare 8% inadequate profits? Yes. Does the exemption apply because entire capital is held by the government? Yes. Can revaluation reserve be used? No. Can revaluation reserve be used? No. Government company exemption only from the 4 conditions, not from the sources. Sources 4 points are common for all the companies. Even providing for depreciation is also common for all the companies, including government companies. Clear? Only those 4 conditions, rate of dividend, sources of dividend, only those 4 conditions are not applicable to 100% government owned companies. Chalo, next question. Galaxy Agrotech Limited, a public company engaged in agriculture machinery, has a paid up equity share capital of 30 crores. Board of Directors met on 10th August 2025 to consider declaration of final dividend at the rate of 12% for financial year 24-25. The profit and loss account reflected to a distributable profits of 4.8 crores. Okay. So 30 into 12% means 4.8 crore only we need. However, during the statutory audit, it was noted that company accepted public deposits of 5 crores in 2021 without complying with the provisions of 73 and failed to repay mature deposits of 1.2 crore due on 31st March 2024. Continuing in default as of board meeting date, CS warned board that such default could affect declaration of dividends. Students, tell me, two companies are prohibited from payment of dividends. Which two companies? Section 8 companies and companies which committed default in complying with Chapter 5 acceptance of deposit rules 73-74 sections. On another note, promoter of Section 8 company Noble Welfare Foundation approached board chairman seeking advice on distributing a portion of its 2 crore surplus as dividends to its members, claiming it was justified due to excess funds. The statutory auditor raised objection and sought clarification on the legality of both the proposals. So, can Galaxy Agrotech Limited declare dividend while in default under section 73 and 74? Answer is no. Can Noble Welfare Foundation Section 8 company distribute surplus as dividends? No. So, if you look at the material, two companies are prohibited from declaration of the dividends. Section 73, 74 violated companies, Section 8 companies. Before that, you can see here deposit and payment of dividend. Just now I told you. So once dividend is declared, within 5 days of declaration, transfer them to separate bank account. That is also our bank account only, but we name it as dividend account, dividend payable account. That's it. It's like an escrow account. Deposit will be within our hands. Withdrawal, shareholders will take care of it. Exemption, this rule is not applicable to government company where 100% capital is held by government. And payment of dividend to the shareholders. Dividend is paid only to the registered shareholder or their order banker. Just now we have seen the question. Dividend to be paid to the unregistered transferee, registered member, registered member. Dividend cannot be claimed by the purchaser until name is registered. On this point only exceptional question I quoted. If shareholder authorizes a bank, payment to the bank is deemed to be made to the shareholder. And this is section 51. In one attempt, this point was also tested. So whether dividends will be paid on face value or paid up value, it depends on section 51, that is articles of association. If AOA is silent, dividends will be calculated on face value. If AOA provides that pro rata dividends, then dividends will be applied on face value or paid up value. Paid up value, not face value. Dividend should be always paid in cash but not in kind. And dividend should be paid within how many days? 30 days. Many students confused between 5 days and 30 days. Sir, 5 days is for transfer of dividend amount from one bank account to another bank account. And payment to the member should happen within 30 days. Is it 5 plus 30? No, 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 no. The 30 includes 5. The 30 days includes 5 days. Timeline chart I'll give you after completion of unpaid dividend account. Just wait. If dividend is paid via warrants, it must be posted to the registered address within the prescribed time of 30 days. And Nidhi companies can pay dividend by crediting the member's account if not claimed within 30 days from the declaration. Generally, unclaimed dividends will be transferred to unpaid dividend accounts. But coming to Nidhi company, you credit that amount to the member account. Directly, you credit that amount to the member's bank account. That's it. So Nidhi companies, 30 days and unpaid dividend account, that rule is not applicable. Unpaid dividend account. Next one, unpaid dividend account. Transfer of unpaid dividends. So on that, let's see the question. Silverline Textiles Limited, a listed public company, declared a final dividend of 4 crores on 1st July 2025 for the financial year 24-25. This is a final dividend. Okay. Dividend warrants were dispatched on 5th July 2025. Actually, dividend warrants must be dispatched within 30 days. By 31st July 2025, 32 lakhs remain unpaid, unclaimed. Finance manager suggested transferring unpaid amount to unpaid dividend account on 15th August. On 15th August, stating the administrative delays. Okay. However, statutory auditor objected, pointing out time limit is prescribed under section 124. Company eventually transferred the unpaid amount to on 18th August. Unpaid amount should be transferred within how many days? 7 days from the expiry of 30 days from the date of declaration of dividends. Total you will have 37 days from the date of declaration for transferring amounts to unpaid dividend account, or else you have to add interest at the rate of 12% per annum. And prepared the statement of unpaid dividend on 20th November 2025 and uploaded it only on the company's website. Updation should happen, upload on company's website should happen within 90 days from the date of transfer to unpaid dividend accounts. One shareholder, Mr. Amit, neither claimed the dividend nor updated his bank details for several years. On 18th August 2032, that is after 7 years, the company still had rupees 80,000 unpaid against his holdings. CS advised that amount and corresponding shares need to be transferred to IEPF. Now, board sought clarification on few points. Validity of delayed transfer to unpaid dividend. What would be the interest liability? And what is the timing for transfer to IEPF and any penalty exposure? So, board is having these doubts. So, questions. Was the transfer of unpaid dividend to UDA, unpaid dividend account, on 18th August 2025 valid or invalid? Invalid because it happened after 7 days. After 7 days. You can see here in the question, 1st July declaration happened. By 31st July payment should be done. Or else by 7th of the August. By 7th of the August, amount should be transferred to unpaid dividend account, but they transferred it on when? 18th August 2025. Delay happened. And whether interest is payable for the delay? Yes. When should the unpaid dividend to be transferred? When should the unpaid dividend amount to be transferred to IEPF? 7 years. 7 years time period is there. After 7 years. What is the maximum penalty applicable for the company in case of continuing failure? Just look into our material. So if dividend is declared but not paid or not claimed within 30 days, transfer all those amounts to unpaid dividend account within 7 days from expiry of 30 days. In case of delay, add interest. How much? 12% per annum. And any person entitled to the money in unpaid dividend account can apply to the company for payment of unpaid dividends. And within 90 days of transferring amounts to unpaid dividend account. So prepare a statement. In one attempt, MCQ came. That statement should contain what particulars? Names of the entitled members, last known address, and unpaid dividends. These 3 particulars are compulsory. Any one particular missing, punishment, penalty will come. And statement should be placed on company website and a website approved by the central government. And that amount shall be transferred to IEPF 7 years from the date of such transfer to unpaid dividend accounts. Clear? And not only dividends but also shares whose dividends remain unclaimed for 7 consecutive years. His dividends and shares to be transferred to IEPF account. And company shall file a statement with the IEPF authority detailing such transfers. Authority will issue a receipt as evidence of the transfer. You will get an acknowledgement. So claimant of the shares can reclaim the shares from IEPF by following the prescribed procedure. In case of contravention, this is the punishment. Company, maximum fine 10 lakhs. Officer in default, maximum fine is 2 lakhs. So that's all about this question. Next. Helios Robotics Limited declared a final dividend at the rate of 12% on its 2,50,000 equity shares on 1st August 2025. On 15 July 2025, Mr. Karan lodged transfer papers for 40,000 shares in favor of Ms. Ria. Declaration happened when? You can see here. Date of declaration is 1st August 2025. But transfer deed was executed before that date only, 15th July 2025. The transfer deed was complete, but the share certificate number was merged. So the transfer remained unregistered as on declaration date, dividend declaration date. On 2nd August 2025, Finance Director credited the dividend to the Mr. Karan's bank account, believing he was still the registered holder. So this is a question on section 126. Okay. Meanwhile, Ms. Ria produced a photocopy of handwritten authorized letter allegedly signed by the Karan but dated 10th August 2025. Is it before declaration of dividends or after declaration of dividends or after declaration? Declaration happened on 1st August. Before declaration only that authorization letter should be given. The CS expressed a doubt about its validity. On 25th August 2025, company announced a rights issue and on 10th September 2025 declared bonus shares from accumulated profits. Board allotted rights to Karan but bonus to Ria, arguing bonus is based on economic ownership rather than register entries. Who told? Register entries only. To the registered member only, all the benefits will be given. Unpaid dividend relating to the another disputed batch of 5,000 shares transferred on 20th July 2025 was moved to UDA, unpaid dividend account, as on 20th September 2025. And statutory auditor questioned the validity of the payment, eligibility of the corporate actions, timing, liability for interest, whether bonus allotment can differ from rights allotment or not. For this, section 126 we need. Section 126 revision of section 126 is needed. If share transfer has been delivered for registration but not registered, then company shall transfer dividends to directly transfer to unpaid dividend accounts unless registered holder authorizes company in writing to pay dividends to the transferee. And company shall keep any right shares and bonus shares in abeyance for those shares, that means hold. So same treatment for right shares as well as bonus shares, same treatment. So based on that, you can see, analyze who is entitled to receive the dividend of 40,000 shares. Unpaid dividend account only. All amount shall be transferred to unpaid dividend as post declaration authorization is invalid. Whether the handwritten authorization dated after declaration has any legal effect? No, invalid. Examine whether rights and bonus shares can be allotted to the different persons when transfer is pending? No, both should be kept in abeyance. Compute interest liability, if any, on unpaid dividend relating to the 5,000 shares, assuming dividend rate is 12%. So interest at the rate of 12% applies on delayed transfer beyond 7 days after 30 days period. See, this is a dividend rate of 12%. Don't get confused. This is the interest for delay in transferring unclaimed dividends. Unclaimed dividend amounts, transferring to unpaid dividend account. In dividends chapter, only two rates are there, 12%, 18%. 12% is for transferring to unpaid dividend accounts. So 18% is for delay in making payments to the members. Two rates only there. Remember these two rates. So that with that, section 126 over. And last question on dividends topic. Blue Arc Motors Limited declared a final dividend of 6 crores on 1st September 2025, payable to all equity shareholders due to a cyber attack affecting the company's banking portal between 10th and 20th September. The finance manager instructed dispatch of dividend warrants only on 10th October 2025. See, when it was declared 1st September and when they posted them 10th October, more than 30 days. Is it beyond the control of the company or not? We need to check. Some shareholders received their warrants late, while a few had disputes regarding transmission of the shares. So one shareholder, Mr. Dev, has provided directions to credit the dividend to a different bank account, but the company couldn't complete due to mismatched IFSC details and communicated the same to him immediately. And that fellow didn't update the mode of payment. Okay, so company mistake or no mistake? Let's see. Another shareholder, Mrs. Anita, owned 1 lakh to the company for unpaid call money, and company adjusted dividend against the dues. Lawful adjustment. Statutory auditor question whether Blue Arc Motors Limited is liable to the punishment and interest under section 127 or any exemptions are applicable. Separately, Golden Nidhi Limited, Nidhi company, declared a dividend of 95 per member on 1st August 2025 but did not pay within 30 days. It instead published the declaration in a widely circulated local newspaper in the regional language and displayed the notice on its premises for 3 months. Correct only. These are the requirements for Nidhi company. The board wants to know whether Golden Nidhi Limited has complied with section 127 by the notification as modified by the notification. Let's see. Distributed dividends must be paid within, declared dividends must be distributed within 30 days from the date of declaration. Or else punishment, officer punishment 2 years. Imprisonment up to is important, and a fine of 1,000 per day during such default continues. Whereas company liable to pay interest at the rate of 18% per annum. But these punishments will not apply in the following 5 cases. First one is due to operation of law. Member became insolvent, for example. Shareholder direction cannot be complied and company informed the shareholder. In many previous examination questions, company failed to inform the shareholder point was given. Now company we exempted or not exempted? Or not exempted, because communication with the shareholder is also required. And there is a dispute regarding ownership of the shares and right to receive the dividends. So dividend has been adjusted against any dues owned by the shareholder to the company, and default caused by the external factors like banking failure, postal strikes, lockdowns, which are not within the company hands. Nidhi company, small line, but one question I created. Just see, dividend payable is 100 or less. If dividend payable is 100 or less, company can announce dividends in local language in a local newspaper and on the notice board for at least 3 months. So whether Nidhi company complied with the rules and regulations? Yes. Let's see the questions. Whether Blue Arc Motors Limited is liable for punishment under section 127 for failure to distribute dividends within 30 days? Yes or no? Yes. Of course, if statutory exemptions apply, then no problem. If banking, cyber attack is there. If company is able to prove that, sir, we are up to, our security systems are up to the mark, but still they were cracked. If you are able to prove like that, then punishment is, you are exempted from the punishment, or else punishment is applicable. Identify shareholders fall under the exemptions. Dev, directions cannot be complied and the same has been communicated. So for Dev, with respect to Dev, there is no punishment to the company. Disputed shareholders, no punishment. Anita, lawful adjustment against the dues, no punishment. And for Nidhi company, comment whether Golden Nidhi company has complied with the law. Yes, Nidhi has complied since dividend is up to the 100 rupees. Notice was published and displayed satisfying the modified section 127. So with this dividends related exceptional areas revision completed. Only one section I missed out, that is section 125. That is a straightforward question about IEPF authority. Now in the dividends, just remember the timeline chart. Just remember the timeline chart. See, this is DOD. What is DOD? Date of declaration. Day 0, for example. Day 0. Within 5 days, by day 5, separate bank account. SB account means not savings bank account. Separate bank account. Transfer to separate bank account. Next, by day 30, payments to registered shareholders. Registered holders must be done. Next, this day 30, now here I'll assume it as day 0. From this date onwards, by day 7, transfer unpaid or unclaimed dividends to unpaid dividend account. And from here onwards, within 90 days, from which date onwards? From the date you transfer to unpaid dividend account, from that date onwards, within 90 days, prepare a statement which contain 3 particulars. What are those 3 particulars? Names, latest known address, and dividend amount due. Publish it on 2 websites, company website and government notified websites. Once amount transferred to unpaid dividend account, from here onwards, wait for 7 years. After 7 years, transfer that amounts to IEPF. So you have to file a statement with IEPF authority. They will give you acknowledgement. So these are the timelines. Here, in case delay happened, 12% interest you have to pay. Here, in case company delay happened, then company has to pay interest at the rate of 18% per annum, whereas officer in default gets punishment, imprisonment up to 2 years, and fine 1000 per day during such default continues. So these are the different timelines in the dividends chapter. So I hope everyone is clear. Next, I'll continue with charges, second chapter. Charges. Let's see the question. In charges we are having 11 sections, 77 to 87. Charges. Matrix Components Limited, a manufacturer of automotive parts, obtained 12 crores term loan from Falcon Bank on 1st April 2023, securing it by creating a fixed charge on its corporate office building valued at 15 crores. So when charge was created? In charges, CMS, remember CMS. C stands for creation, M stands for modification, S stands for satisfaction. In these 3 cases, within 30 days of creation, modification, satisfaction, communicate with ROC for that payment of normal fees is sufficient. Okay. On 1st June 2023, the company also executed a deed with Zenith Finance Limited, a 8 crore working capital loan secured by floating charge over stock in trade and book debts. So 2 charges are there. One is fixed charge, the other one is floating charge. Working capital loan secured by floating charge, 2 charges, 2 companies. On 5th December 2023, that means after 8 months, 5 days, Company sold a portion of office building for 4 crores without informing Falcon Bank to fund a new warehouse project. CFO argued that since the value of the remaining building exceeded the outstanding loan, no breach occurred. What is the value of the building? 15 crores. And how much is that loan account? 12 crores. So they want to, they sold some 3 crores worth of building. Intention is that 15 minus 3, 12. Outstanding loan 12, remaining value of the building also 12. There is no problem to the banker. But if you remember, fixed charge is something. Fixed charge. Tell me, borrower is free to deal with the property, or without, that means without consent of the charge holder. Can he sell the property? No. Floating charge allowed, fixed charge not allowed. Meanwhile, due to drastic market fall, company defaulted on payments to Zenith Finance Limited on 1st February 2024, and creditors issued a notice of enforcement. During this period, company also sold stock worth 2 crores to the Clear Traders Limited in the ordinary course of business. See, what type of charge Zenith created? Floating charge. And what type of charge Matrix created? Fixed charge. Floating charge, you are free to deal with the properties, but if crystallization happens, you can't deal with the property. Crystallization means what? Converting floating charge into fixed charge. On 10th March 2024, voluntary winding up proceedings commenced. Zenith Finance Limited claimed that the charge had crystallized and wanted to claim rights over all stock and debtors existing as on the date. Which date? 10th March 2024. Clear Traders questioned whether its purchases remained protected. Falcon Bank demanded reinstatement or repayment of unauthorized sale of the charged asset. Now the statutory auditor must comment on the legality, crystallization and purchaser's rights. Was the sale of part of the office building without lender consent valid or invalid? Second question, did Zenith Finance Limited floating charge crystallize? From which date? From what date? Is Clear Traders Limited protected in respect of goods purchased? Because it is in the ordinary course of business. You can see here, ordinary course of business. Next, what remedy does Falcon Bank will have? So we'll see charges chapter. So you can see here, fixed charge, identified assets, specific assets identified during the creation of charge, and cannot be sold without permission of the charge holder. Even the value is more, but cannot be sold without the consent of charge holder. And charge created via mortgage or deposit of title deeds, charge is vacated only upon full repayment of the borrowed money. Until then, property is charged property. You can use it, but you cannot sell without prior permission of charge holder. Floating charge is on fluctuating assets. This charge is not only applicable to existing assets, it is also extended to future assets. Charge allows company to deal with the assets in the ordinary course of business. That means you can buy them, you can sell them, you can process them, you can sell them. You can also collect amount from the debtors, you can use it for production. Charge created via hypothecation or lien, floating charge becomes fixed when the creditor enforces security or companies goes into the liquidation. So crystallization, you can see crystallization happened in the following 4 cases. Remember, terms violated, company stops operations, company goes into liquidation, company creditor enforces the security covered by the floating charge. Terms, for example, banker told continuously 3 installments, if you are not paying, your floating charge will be converted into fixed charge, and terms you violated. Company stops operations, if there is no production, how new stock comes, how new debtor comes, and company goes into the liquidation, no more business operations, creditor enforces the security. In the following 4 cases, floating charge will be converted into fixed charge. Until then you are free to deal with the properties covered under floating charge. You can sell them, you can manufacture them, again you can sell them. One simple example, I'm having gold, it is an asset to me, fixed asset. If I create any charge on it, fixed charge. But the same gold you take from Kalyan Jewelers, Lalita Jewelers point of view, for them it is is it a fixed asset or stock? Stock. If they create charge on those assets, it is a floating charge. Next one, duty of company to register the charges. So yes, I think that point is not covered in the case scenario. It's all about types of the charges only. So first case, was the sale of the part without lender's consent valid? No, it is invalid, irrespective of surplus value. Did Zenith Finance Limited floating charge crystallize, and from which date? When creditor enforced the security. When creditor enforced the security from the date crystallization is said to be effective. Is Clear Traders Limited protected in respect of goods purchased? Yes. Ordinary course of business, and that too prior to crystallization. What remedy does Falcon Bank have? Falcon Bank may demand repayment or enforce security due to unauthorized sale of the property. Next, question number 2. So in the first question, we have seen types of the charges. Question number 2. Metro Sky Infrastructures Limited obtained a 50 crore loan from Horizon Bank on 10th January 2025, secured by deposit of title deeds. This is nothing but fixed charge only, because charge includes mortgage, fixed charge also includes mortgage. Over its Bengaluru IT Park building. The board believed deposit of title deeds does not require registration. Super. Therefore, no filing was made within the 30 days. What is the need of registration of creation of the charge? Why we are registering the creation of why we are registering the charge with ROC? Upon registration, it becomes public document. It prevents subsequent finances on the same property. It protects public interest. That's it. On 1st February 2025, Metro Sky